morning for this Thursday, August 15th. First chart we're looking at here is the daily chart of the US dollar, Canadian dollar Forex currency pair. Right, if you recall, we went long a few days back here, went long at 103.17. First profit objective was hit right here at 103.57, made 40 pips on that, and then immediately brought our stops to break even, which we did right here, this line right here, this white line, and we got stopped out with a break even trade on the remaining portion of our position, but we still took off 40 pips and lost nothing on the remainder. So that was, in my book, that was a good trade. Let's take a look at the TBT trade, this interest rate play that I've been talking about for months and months and months on end. This market, believe it or not, is going to be opening up considerably higher today. The overall market's going to open up about 100 Dow points lower. So this bond market here is, this interest rate play is opening up today. Right now, before the market opens, it's trading at about $79.83. $79.83. Now, these highs right up in here, 78.77, over a point from these highs. So this market's going to gap up big time. Now, if you recall, I sold the September 20 puts about a week ago for $1.30, okay, for 72 to get filled at 72 on the underlying if the market were to close below 72, which is way down in here. So that was a great trade. When the market sold off, right, when the market sold off, right in here, that's when I sold these puts at 72 to collect $1.30. Now, granted, yes, I would rather be net long this market, but I'm not, because we haven't gotten any reasonable pullback. I've had a few trades on the way up here, but again, I need to be long for the longer term. But this $1.30 is going to crack. I mean, it closed yesterday at about 64 cents. And I'm anxious to see where it's going to open up today. This put will be close to worthless, even though we've got a few weeks left. I really want to get long this market, and I'm going to employ a more aggressive tactic here. I'm going to see where it opens up today, and I want to see where it trades today. If the market's unable to try to fill that gap, like right in here, right when we gapped from here up to here, market didn't even attempt to fill that gap at all, which tells me the market's going to go strong. Is a lot stronger than it, right? Is strong, right? This is an exhaustion gap. Well, are we going to get another one today? Well, of course, we're going to get a gap higher. It just, I want to see what happens on an intraday basis. Do we try to fill that gap? Again, if we don't try to fill that gap, I'll be looking for a long position, a net long position in the underlying today. Okay? And tomorrow morning, I'll let you know what I did, if I did anything, but I want to watch the action on this one. Apple, the next one. Unbelievable. This is strong. Market hit, what, 504 yesterday, I believe. 504 and a quarter. Closed at, 498. Looks like it's opening about 494.87 right down in here, right? So, again, yesterday the market did not trade down to that number. I was telling you that I was looking to go net long, and that was at 488. Market only traded down to 493. If the market sells off today, if we get some type of sell-off today, I would be looking to initiate a long trade. I would be. The first level that I'm going to start looking at, though, today would be at the 38.2% retracement from this low here, this low, to this high, right? The 38.2 is 484. I'm going to go 484 and a half. That's my first level in which I will look to put on something. Now, if you recall, I did sell the August 16 puts down at 480, and that's obviously going to expire. Well, again, we've got 2 full days of trading. If we close below 480 tomorrow, then I would be put this stock at 480 anyways. So I'll take a look at this, but this is what I'm looking to do. I'm looking to get my foot in the water today at 484 and a half. All right, real quick, let's talk about gold for a minute here. Take a look at this gold, GLD. GLD, which is the ETF for gold, right? Look at gold. Look at it real quickly here. And then I'm going to flip to silver. Look at silver. Silver is up big time. And it's not opening up much further down from where it closed. It closed at 2109. It's trading currently at 2101. Look at gold on the other hand. It closed at 129. Pretty strong day for gold yesterday. Looking like it's opening up at about 127.95, much lower. Okay, but again, take a look at this chart. Gold and silver. Silver is much stronger than gold right now, and I'm expecting for gold to catch up to silver. I'm actually looking for gold to try to retest that 130.14 level on the ETF. In terms of the actual futures contract, I'm looking for that retest of 1350. 1350. Okay, we're at 1324 now. Look at silver, the futures. Pretty much straight up on a straight shot here. So I'm thinking that gold is going to catch up with silver, and I think we're going to get a rally in gold. So to catch up to that silver, remember, we were looking to buy silver to catch up with gold because gold really made a big up move up off this low, whereas silver was just consolidating, and then finally silver caught up with gold. So I think it's the inverse way now. Silver is leading gold a little bit in this move up, so I think gold is going to catch up. So that's all I have to say today. Hope you learned a little something. If you've got any questions, let me know. Have a profitable day, and I'll be back with you tomorrow. Bye for now.